In this video, I'm going to be talking about how I caught a trade this morning on NQ using an inverted fair value gap on the 1 hour time frame. So let's jump right into it. As we can see here, we can see that this bearish candle delivered to the downside around 5 a.m., closed at 6 a.m., and then we got this third candle that actually closed the sell side imbalance, buy side inefficiency, or what we can call a bearish fair value gap. Now, once we open up this range, what I was watching is how price was playing around this morning. So we can see that the low of London was put in here, and then from there we actually were maintaining the low. So we can see right here at 8 a.m. we retested that low, and then we started wicking back and forth. The fact that we were maintaining this low, the fact that we impulsed so far, and the fact that we actually ran all these levels of liquidity to our left made me think that price may not want to retrace too far. Now you can see that I already had marked out this impulse leg, right? So from low to high, understanding that price, if it truly wanted to, it can come back to the 50%. But we have to think about the correlation of what is the main objective, right? So since we already cleared out all this liquidity, to me, the main objective now was to retest this bearish order block that we had over to our left, as well as potentially retest around the 50% of this range. So if we zoom out to around the 3 hour time frame, we can see that this turns into a huge wick. So that is where I was anticipating price trying to reach towards. Now, if we drop down to the 15-minute time frame, what we can see is we had all these lower highs being put in. We actually ran some equal lows in this range, and then we get a bullish order block closure. Now, this bullish order block does not lead to a run of a short-term high or anything like that, but it does establish a level of demand. So if we were to mark this zone off, what we can see is that it's maintained, right? So we can see price retested, reject over and over and over again. So price is just pooling and accumulating enough strength to actually reverse here. Now we get this huge bullish candle. And these are the kind of candles that people chase. So people are going to try to get in immediately as this is moving up or even closing. And what ends up happening a lot of times is the market moves exactly the opposite direction. Now, where would people be placing their stop loss if they bought this candle? Either right under the candle that expanded or right under the reversal, so the bearish bullish rejection. So what we can see is price comes back down, actually clips that area, and would have stopped all those traders out. And then we get the bullish bearish bullish pattern right back above that fair value gap. So now we're inverting it. Okay, the next candle, we get this bearish candle that wicks down and closes a smaller candle body than wick, which is telling us that the buyer's strength is stronger in this area. So this is actually the candle that hinted to me the next move that was going to occur. I wanted to see another bullish bearish bullish pattern form here. When this next candle was moving around, what I was looking at was the 5-minute and the 1 minute. Now on the 5-minute, what we can also see is that we had a sell side imbalance here. And as this sell side imbalance was starting to be reversed, because we have these 3 bullish candles that shot up, we get that retest here, right? We get that retest into the range. We had another fair value gap printed here. So we can see all of these confluences overlapping, right? So we're still bullish from the higher time frame. We closed the bullish bearish bullish pattern on the higher time frame here on the M15. We have the fair value gap from the H1 that's now being inverted. We have this 5-minute sell side imbalance that just got closed back above, retested into with a new fair value gap point of interest. Then we close these 2 candles with long wicks to the bottom side and a bullish candle closure. And from there, what we're looking for on the 1-minute time frame is just simply a decent place to enter and place our stop loss under the move. So what we can see is we were continuously running short-term lows, and then all of a sudden we ran this first short-term high. Not only that, but we created a bullish order block that actually maintained its price. So we can now see we had bearish bullish rejection, which gives us a left shoulder, another bearish bullish rejection that's lower that gives us a head of a pattern, and then we get the bearish bullish rejection here that gives us a right shoulder. So now we have a quasi. Okay, we now have a quasi, which is showing us the market is reversing back bullish. So now our next goal is to wait for another short-term high run that gives us 2, and then we're looking for a fair value gap to be printed. Now in this price action, what we can actually see is there were multiple gaps printed as price pushed up. We had this first one in this area, and then we also had this one here. Now for me, instead of always trying to get the most surgical sniper entry, it's a lot more stress-free to just simply place your stop loss in a safe place where even if price does want to retrace a bit, you don't really have to worry so much about the trade not playing out. So as you can see, I placed the stop loss under the lowest wick of this quasi so that we would be safe no matter if price wanted to come back, retest these imbalance points, or even where this previous fair value gap range was. And what we can see is at first we do see some bullish expansion. So we actually entered on this bullish candle here, played around for quite some time, and then we get this compression channel. So price starts making lower highs and lower lows inside of this last impulse leg. Still overall maintaining the bullish momentum, but we just had to accumulate a little bit more. We're not worried about this drawdown. Once again, we safely placed our stop loss. And shortly after that, I mean, from 10:23 to around 10:45, so only 20 minutes, price went bearish. And from that point, price completely took off. And we could see that after it took off, it didn't really stop much until we had about 160 points of a move, had a quick take profit event of about 50 points, and then we expanded to around a 246 point push. Price is still currently playing around here, kind of ranging, building up the next accumulation phase before another move. But nonetheless, I just wanted to show you guys how you can actually trade the inversion fair value gaps with our strategy and understanding of how we see the markets. If you like this video, make sure you comment, like, share, and I'll see you in the next one. Take care.